What's up, pioneers? This is Daniel here with your Daily Investor, the place where we talk about investing, not only in stocks, but in yourself. Invest in yourself first, and everything else will follow suit. What's up, pioneers? Now, before we get into this video, I want to say thank you to all of you for showing out and showing support on the first video. I'm super grateful for you guys, and I cannot wait to see the momentum that we bring to 2021, because we're going to do this thing, baby, and I cannot wait. So thank you guys. Now I'm going to quit all this talking, and we're about to get into this video, because I'm super excited to talk about Dropbox, ticker symbol DBX. Now, this is a company that I'm super excited to cover, because look, when I found out that the stock price, when I looked at it, it was at $22. And I know a lot of you guys know Chris Sane. He's the one that introduced me to it. And I looked at it and I said, $22 Dropbox? Dropbox is $22? I was shocked. I was shocked because I don't really think a lot of people understand what Dropbox really is and the power that Dropbox has. It's in the cloud storage space, which has so much room to grow. And we're going to talk about a lot of that in this video. So in this video, we're going to see if Dropbox is worth your money to invest in. So first things first, I want to explain to you guys what Dropbox really is. So before we can know anything fundamental or technical about the company, we got to know what the company is. Dropbox is a cloud storage service that lets you save files online and sync them to your devices. You can use Dropbox links to share files and folders with other people without sending large attachments. So to kind of help you figure out what Dropbox is if you don't really know, I know a lot of you guys know what Microsoft OneDrive is or Google Drive. It's basically the same thing. They're all in a cloud storage space, and it lets you save files. And then if you have other friends or family on that account, they can log in and they can get the files that you have. So you guys are all just sharing. You're sharing the same files on one account, which is amazing. It saves a lot of time from having to just send things over or email it over. It saves so much time, and I'm a big fan of cloud storage. So now that you know that Dropbox is in the cloud storage space, I want to show you guys why I think that Dropbox is going to be an amazing stock and why it's for sure going to 2 times itself. So now that you know that Dropbox is in the cloud storage space, this right here is a crucial piece of information that we need to know going forward. So look, the global cloud storage market size is projected to grow from $50.1 billion in 2020 to $137.3 billion by 2025 at a compound annual growth rate of 22.3%. Now that is huge. Going from 50.1 billion to 137.3 billion, and that's just the forecast right now. That can change. It is possible that it can change. It can definitely go higher. I truly believe that it will be higher because of now our world is totally different. This pandemic has shown that we can do a lot from home. Cloud storage space is very crucial for people that work at home. We now have people that'll never work at a job site ever again. We have companies that'll never establish a job site. They'll simply have their people working from home, and cloud storage space will play a big part in that. It also will play a big part in others that are having their own businesses that want to share files with people that they're starting businesses with. This is very crucial. And I also want to go down here and read this to you. I really believe Dropbox probably should have shot up with the pandemic because a lot of people stayed home and we had to share a lot of data. With the global lockdowns, business continuity challenges, and growing work from home trends, COVID-19 has forced organizations to move to cloud environments to cope up with the crisis and facilitate daily data access, sharing, and work collaborations to its geographically dispersed teams. That is very crucial because the cloud storage space will never be the same now. This year, cloud storage space is going to be even bigger. We're going to have more people probably working from home than we ever have because of the pandemic. And that right there just helps Dropbox at the end of the day. Dropbox is one of the major competitors in the game when it comes to cloud storage space. They are very huge. Everybody knows who they are, and they are very slept on. And I'm really surprised that the stock price is only at $23 right now. Now that you guys see the total overall revenue of the cloud storage space and where it's projected to go, I want to show you guys why I think Dropbox is a great investment in the short term and also in the long term. So if you didn't know, this right here is a financial statement. Looking at balance sheets and financial statements are very key to look at before you invest in a company. You have to do your own due diligence before you just jump into a stock just because somebody recommended it. You have to know and have that feeling for yourself that this is going to be a good stock for you to invest in, because it is your money at the end of the day and you want to see gains, not losses. Now, if you can see, we have the financial statements for Dropbox all the way back to 2015. Now keep in mind, Dropbox didn't IPO until 2018. Let's dig into this financial statement. At the end of 2015, their total revenue was $603.8 million. I want you to pay attention to how this company is growing and just look at the numbers and see year by year how they're growing. They ended the year at $603.8 million in 2015. They moved on to $844.8 million at the end of 2016. 2017, $1.1 billion. At the end of 2018, $1.3 billion. You see the growth? You see how they're on this path going forward? So each year, their year over year has beaten the previous year. Now, that is a great sign for an investor if you want to invest in a company. So when I seen the financial statements, I was like, okay, this company looks pretty good to invest in, but I want to see if they're profitable. If they're profitable and not having any debt, that right there is just the icing on the cake. So I had to dig even deeper. So after seeing their growth year after year, I wanted to see if they were profitable now, because that right there would be the icing on the cake for me to be like, okay, I'm really bullish about this company. And so I came across this article and I read it and I was like, yeah, we got something here. We got gold here. So this was back in May of 2020 that Dropbox seen its first quarterly profit since its debut as a publicly traded company in 2018. And as you see it, they said that it came a bit sooner than expected, which is amazing to see. That is things that you like to see, especially that a company that you believe in, if they're already progressing and beating expectations, you love to see that. But I had to dig a little deeper to see if I would still like to invest in this company, and that led me to this. And when a statement starts off like this, you can't do nothing but get excited. They said, for now, the proof is in the profits. We'd like to hear that. The San Francisco-based company, a pioneer in file hosting services, reported first quarter net income of $39.3 million or 9 cents a share, compared with a loss of $7.7 million or 2 cents a share in the year ago quarter. Look at that, $39.3 million. The past year, that same quarter, they were at $7.7 million. But this quarter, they're at $39.3 million in revenue, which is their first profitable quarter since the IPO, which is amazing. Their revenue climbed 18% to $455 million from $385.6 million a year ago. But Wall Street continues to sleep on them. And also, going even further, they had 14.6 paying users compared to 13.2 the same period a year ago. So they're growing. More people are using their product, which is amazing. Those are statistics that you like to see when you're going to invest in a company. But I want to see one more thing, because they will be revealing their quarterly earnings for quarter 4 of 2020 on February 18th. So as an investor, those are statistics that you like to see and give you what I call confirmations to give you the go ahead and invest in the company as long as you believe in it. But since they are going to reveal their earnings for quarter 4 of 2020 in February, I want to go one step further just to make sure that I'm okay with it. So what we're looking at now, this is the actual transcript from the earnings call of quarter 3 from 2020. So during this part of the call, this is when Tim Reagan, which he's the chief financial officer of Dropbox, he said this, which blew my mind. He said, with that, I would like to turn to our quarter 3 results that demonstrate our execution in line with this investment thesis. Total revenue for the quarter was up 14% over year on the actual and constant currency basis to $487 million. ARR ended the quarter at $1.98 billion, an increase of $50 million quarter over quarter, and an increase of 12% over the year on a constant currency basis, year over year growth. And that is fantastic. That just gave me more confirmation to invest in this company, especially since I know their earnings is coming up in February, and they've been killing their earnings year over year over year for the past 5 years consistently. I'm very bullish about this company, especially short term. Now, I am not a financial advisor. Do your own due diligence. I'm investing into this company. I'm just putting it out there in the universe for you guys to know about. So if you want to invest in it, go ahead. And there was one more thing they revealed during this earnings call that caught my attention, which was at the end of quarter 3, they ended with 15.25 million paying users, which that added 290 new paying users for that quarter for year over year. So looking at that piece of information pretty much gave me confirmation to go ahead, invest in the company, and let's see what happens with the next earnings, which will be February 18th, I believe, 2021. So now that we have that information, this is the time where we want to jump in and see where should we buy this company at? What price point do we want to buy Dropbox by looking at your research. By any means, just go ahead, jump in, but make sure if the price drops, you dollar cost average your way down. But the way I like to do it, I like to use my technical analysis and go into the charts and look at the support zones and the resistance zones. So that right there will give me my best price targets to look at for when I want to get into this company. So now let's look at the chart. So this right here is a website called TradingView, which it is free, and I advise each and every one of you guys to use this if you want to. If you want to look at charts and go into depth, this right here is a great source for you guys to use. And like I said, it's free. So around the area of $24.13 is where the resistance is. How you want to find resistance is you want to go back and look and see in the past where areas have touched. So this right here was around June 22nd, 2020, where it hit this price point, and it came right here in December and touched it again. And now if you look at it, it looks like it's starting to make its way back right here. And so this is a great sign. You want to see it go up and retest that zone, hopefully break it. Now once it breaks $24, you want to see it stay above that price, or if it drops a little bit, you want to see it consolidate at least above $24. And so in this area is my support zones. Support zones are where you like to find your entry points and when to get into a stock. And you can also set your own entry points. I had mine at 21.51. I was wishing that it'd go back to 21.51. It might not, because right now it's at $23.35, but it's a company that I believe in, and they have earnings coming up in February, and which that right there is already a strong catalyst for this stock to rise. And so now, after looking at the charts and seeing that, I want us to go and look at my portfolio. And so now I want to take a look at Dropbox and my portfolio. So as you can see today, the lowest point today was at $22.11, and it shot all the way up closer to that $24 range, where it's trying to go up and to where I believe it's trying to go up to that resistance zone. It went all the way up to $23.81, and which that is a good sign to see, because more times than likely it'll probably go back up to $23.81 to try and retest that zone one more time and see if it can go past that. Which that is a good sign today, because that's making progress towards the $24. And so what I did today, of course, I said I would love to get this company around $21, in which it can possibly go back down to $21. And I hope that it does, because I promise you I'm going to pounce. I'm not going to panic sell from my position at $23. I'm going to pounce all over that $21. So I just want to show you guys, I went ahead and built out a small position today and got 34 shares at an average cost of $23.20. And now this is where patience comes to play. Now the stock can run up from here. It can run up from here, and you have to, if you really believe in it, you can jump in. But for me, the advice I want to tell you guys is, I have 34 shares at $23.20. Now if it comes down, I'm going to pounce all over it, and I'm going to buy more. I'm going to buy more. But if it goes up, you don't want to get caught chasing. You don't want it to go up to $25, and then you get scared and you get the fear of missing out and go out and buy shares at $25, and then it just drops. And what if it drops to like $20 and you don't have the capital to handle that pullback to be able to average down? So you have to be aware at the price that you buy stocks, and you always want to make sure that you have capital on hand, just in case if that stock drop, you will be prepared to buy instead of just sit there and probably sell out of positions in other stocks that you actually like, just so you can create capital for yourself to have to average down. And so that right there puts you in a sticky situation that you don't want to be in. But I got Dropbox at $23.20, and so if it goes down, I got a good enough capital to be able to pounce on it and be able to build up my shares in it. I want to be able to build my position out in Dropbox to 125 shares, because I truly believe in it. And then with its earnings coming up, it's a strong catalyst for this stock to go up and break its resistance at $24, and which if it breaks $24, it's probably going to shoot up to about $28, which is the median price target the analysts have for this stock. So I hope this video helped and showed you guys on how to do research, things that you want to look for. So I'm going to end the video there. Thank you guys so much for the support on the first video. Are you going to invest in Dropbox? If you do, let me know in the comments. If you have any questions, let me know in the comments, and I'll be sure to reach out or put it on the next video. So Pioneers, I hope you guys have a great night. Be blessed. So stay up while we're on the come up and never look down. Be best, Pioneers. Have a good night.